In accordance with the International Financial Reporting Standard (IFRS), the following items or elements have had their conceptual names changed. When we mean conceptual name, we mean the original name or the name for which such items are known. For instance, under GAAP, that is Generally Accepted Accounting Principles, we have an account known as the Trading Profit and Loss Account. Under IFRS, this name, Trading Profit or Loss Account, have been changed to Statement of Profit or Loss Account and Other Comprehensive Income. That means it is no longer called the Trading Profit and Loss Account, but called under IFRS the Statement of Profit or Loss Account and Other Comprehensive Income. Under the GAAP, the balance sheet had changed its name. It is under GAAP that is called the balance sheet. But under International Financial Reporting Standard, the balance sheet is called Statement of Financial Position. So we have agreed that the Trading Profit and Loss Account is now called Statement of Profit or Loss Account and Other Comprehensive Income. And also that the balance sheet is now called Statement of Financial Position. Now let us analyze or see the changes in relation to items that makes up the Statement of Financial Position. In the Statement of Financial Position under GAAP, we have what we call the fixed assets. It is no longer called the fixed assets. Under the IFRS, it is now called non-current assets. We also have in the Statement of Financial Position under the current assets, we have what we call stock. It is no longer called stock. It is called inventory, or you can call it closing inventory. Or if it is the opening one, you call it opening inventory. The name had changed from stock under GAAP to inventory under IFRS. Also, we have what we call debtors under GAAP. That is people that are owing us. This name has changed to receivables or account receivables. Also, we have what we call creditors under GAAP. That is people that we are owing. Suppliers that we purchase goods from and we have not paid. They are called creditors under GAAP. But under IFRS, they are called payables or account payables. We also have what we call the long-term liabilities. Long-term liabilities usually appear in the Statement of Financial Position. Under GAAP, it is called long-term liabilities. But under IFRS, it is called non-current liabilities. Then we have what we call the shareholders fund, which can be called under sole proprietorship capital. Now, the shareholders fund has changed its name from GAAP, which calls it shareholders fund, to what is known as equity. So rather than calling it shareholders fund, now we call it equity. Under GAAP, we have what is known as profit after tax. That is when taxation has been removed from the net profit made in every year. Under GAAP, it is called profit after tax. But under IFRS, it is called profit for the year. Under GAAP, we have what is known as net book value. That is when the value of a fixed asset or non-current asset is carried forward in a particular accounting period. In most cases, after depreciation or accumulated depreciation has been deducted. The remaining balance is called net book value. That is under GAAP. But under IFRS, it is called carrying amount. So these names have changed, and it is expected that in compliance with IFRS, when you are preparing your financial statement, these new names that are in compliance with IFRS should be used. So we have agreed that the trading profit and loss account can now be called statement of profit or loss account and other comprehensive income. We have also agreed that the balance sheet can now be called statement of financial position. We have also agreed that fixed assets can now be called non-current assets. Also, stocks can be called inventories. Closing stocks can be called closing inventories, and opening stock can now be called opening inventories. Debtors can now be called receivables. Creditors can now be called payables. Shareholders' fund can now be called equity. Long-term liabilities can now be called non-current liabilities. Profit after tax can now be called profit for the year. Also, net book value of an asset can be called carrying amount of an asset. Names under GAAP, names under IFRS. Trading profit or loss account is now statement of profit or loss account and other comprehensive income. Balance sheet is now statement of financial position. Fixed assets is now non-current assets. Stock is now known as inventory. Debtors as receivables. Creditors as payables. Shareholders' fund as equity. Long-term liabilities as non-current liabilities. Profit after tax as profit for the year. Net book value as carrying amount. These names comes under IFRS, while this comes under the GAAP. GAAP means Generally Accepted Accounting Principles. IFRS means International Financial Reporting Standard. And we said that in accordance with International Financial Reporting Standard, IFRS, the following items or elements have had their conceptual names changed. Names under GAAP and names under IFRS has been explained. We have talked so much about IFRS, that is International Financial Reporting Standard. The question is, what is International Financial Reporting Standard? International Financial Reporting Standard sets common rules so that financial statements can be consistent, transparent, and comparable around the world. International Financial Reporting Standards are issued by the International Accounting Standard Board. What do we mean? It is a standard or a form of book, a form of law book. It sets common rules. Why does it set these common rules? So that financial statements around the world can be consistent and transparent and also be comparable around the world. That means the way they are keeping accounting records in America should be the same way they are keeping it in Nigeria or in Britain or in UK or any other parts of the world that conforms with the rules of international financial standards. Just as the lawyers have their law book, International Financial Reporting Standard is a form of law book that sets common rules. And these common rules ensures that financial statements are consistent, transparent, and comparable around the world. International Financial Reporting Standards, IFRS, are issued by International Financial Reporting Standards Foundation, that is IFRS Foundation, and also by International Accounting Standard Board. So the question is, since IFRS sets common rules so that financial statements can be consistent, transparent, and comparable around the world, what is now the financial statement that they are setting these rules for? Financial statement simply means the trading profit or loss account, now changed by IFRS as the statement of profit or loss account and other comprehensive income. That is for profit-making organization. The financial statement for the non-profit making organization is called the income and expenditure account, or can be called the revenue and expenditure account. Balance sheet also forms part of the financial statement for profit-making organizations and non-profit making organizations. Remember that the balance sheet is now called statement of financial position. So we can summarize the financial statement as the profit or loss account for profit-making organization or the income and expenditure account for non-profit making organization. Balance sheet inclusive in both the profit-making organizations and the non-profit making organizations. A complete set of financial statements is made up of the following: an income statement, which can be called a statement of profit or loss account and other comprehensive income; a statement of changes in equity; a statement of financial position; and a statement of cash flow. For our foundation knowledge, we can include notes to the accounts or notes to accounts. So we have mentioned four basic areas: the income statement, which can be called the statement of profit or loss account and other comprehensive income; the statement of changes in equity; the statement of financial position; and the statement of cash flow. These four basic areas will be treated extensively as we progress.